This is the end of day recap for April 15th in the market. What happened today? Let's take a quick look. So some interesting news out of the Financial Times. Wall Street banks $37 billion from the trading boom that has been brought on by all of volatility from Trump. So this article says that between Goldman, Citi, JP Morgan Chase, Bank of America, and Morgan Stanley combined, the equity trading revenues this quarter was 34% higher than last year, and fixed income trading was up 6% from last year. Clearly, when times are good or when times are bad, banking is a good business to be in, especially if you have like a diversified offering, because you make money off of the interest when rates are high, or you make money off of the trading when volatility is high. So clearly, banking is just a good business to be in when you're taking fees on every transaction. Keep in mind that the reports or the results are just from the first quarter, so we haven't yet seen what's going to happen after Q1, because all of this crazy stuff started April 2nd. So banks will probably do even better in the second quarter, although now the expectations may have been set so high for the next quarter that they may not be able to hit those targets depending on what happens, although I don't really foresee there being less volatility going forward, so I think they'll do great. Another thing that was interesting, which was that Bank of America's profit climbed with consumer spending resilient. We just had the consumer sentiment survey come out, which I talked about yesterday, and it talked about how consumer sentiment is pretty much at an all-time low, and the inflation expectations are completely out of whack. And this is talking about how credit and debit card spending rose 4% from a year ago. They pointed out that this may just be from people making purchases in advance of price increases from new tariffs, which could be the case. But I had kind of a thought about this. I wonder if this will kind of show up in Robinhood as well. I think Robinhood is going to be one of the biggest growth bank stocks. It's not really your traditional bank stock, but trading brokerage, and right now is a really great time for trading, as we have seen. Let's see what Robinhood has been doing recently. I wonder if on this news Robinhood has gone up at all. It would make sense for it to have popped a little bit. It looks like people sort of started to figure out as soon as the first bank earnings started to come in, Robinhood has been going up and up and up. So I think there is a little bit of pricing in of expectations that Robinhood will see some good returns. I do see a path for Robinhood to actually go pretty impressively high. They did have some bad press a long time ago. They report their quarter one earnings on April 30th. And I am expecting that to be quite positive for Robinhood because of all the trading that's happening right now. As people get inheritances and these types of things, and as the younger cohort that likely started trading on Robinhood kind of continues to do so and continues to make more money and continues to put crazy bets on Wall Street bets, then I think probably Robinhood will be an interesting play. So that's the news with Robinhood. So United Airlines is an interesting company to look at. They just had their earnings released today after market close, and they're doing their earnings call tomorrow, because we saw Delta the other day, and Delta's stock reacted pretty negatively to some of the things they were saying. They were having to cut flights. They were expecting lower demand. But United seems to have avoided all of the turbulence so far. And it's quite surprising. Their stock is up after hours after their earnings by 6%. And it seems like the CEO is guiding for United to do really well going forward, which I wasn't expecting based on all of the economic data that we've been getting recently. Based on the report, seems extremely optimistic that people will continue to travel and continue, specifically for United, will continue to use their airline, and it seems like they're doing just fine. And I wonder if it's partly because they have a bit more of an expensive consumer segment. Revenue estimate was basically exactly what they ended up with, and their earnings per share was 22% higher. And going forward, they're expecting a little bit higher earnings per share as well. There was one thing where they said they might be cutting capacity a little bit by the third quarter, but it seems like they're managing to keep their earnings up, even though it seems like other airlines are struggling with demand. For some reason, United seems to be insulated from this. We'll see if they can continue to do that, and we'll see if this gets better or worse, but that's kind of the trend at the moment. So that's the news on airlines for the day. I wanted to also chat about this Netflix article that I saw, which was kind of interesting. Apparently, Bank of America sees Netflix hitting a $1 trillion valuation by 2030, driven by ads, global growth, rising subscriber momentum. So Netflix is going to be having their earnings on Friday when the market is closed, but there was a report that came out talking about how they're expecting to hit a $1 trillion valuation. Netflix does seem to be growing, and it does seem to have some good strategies in place to continue growing. That the thing that's actually really in Netflix's favor right now is that it's not going to be super affected by tariffs, because streaming, they can still stream in pretty much all of the world. I don't know if they were ever streaming in China, which is where most of the tariffs are. Netflix doesn't operate in China. So Netflix is one of the most insulated stocks out there. I think that, and then on top of all of the growth factors that people are talking about, I do see that Netflix is probably going to be a solid bet going forward. I just don't know how much more growth they can do at a certain point without getting into China. And you're also seeing this trend of Hollywood movies getting cut, a decrease in viewership as far as movies go. But a lot of the people that are picking up those viewers are these streaming platforms. So it is plausible that it does hit that valuation. And I do think, as far as a company goes that's well insulated from all this tariff stuff, it's Netflix, because nobody is really tariffing services at the moment. So they have a lot of potential for growth. They're pretty well insulated from all the volatility. If their earnings continue to do well, I think that it will be a pretty solid stock going forward. I think as far as the streaming wars go, a lot of people are kind of falling off, and Netflix seems to be taking the largest slice of the pie. They have that first mover incumbent advantage. We'll see if they can maintain that advantage going forward. The earnings, I think, at the end of the week will be pretty indicative of what to expect. As far as the overall market goes today, if we look at all of the stocks, the overall market, the S&P was down 0.17%, which is basically flat for the day. The dollar index was trading a little bit higher. It looks like it's kind of reverting now as I'm talking to you. So the 10-year bond is doing what it's supposed to be doing in a volatile time, which is coming back down a little bit. I don't know if this means that faith has been restored, but I think slowly but surely what's happening is that the market is kind of deciding, without Trump doing it for them, that Trump will change his mind, because that is literally the only reason that the market is not dropping like an absolute stone right now. Because if you look at the fundamental economics of everything, earnings are going to get crushed for a lot of companies, and it's not going to be kind of this equal situation. Small businesses are going to get completely wrecked, but all of these big companies that have an in with the administration will get exemptions, as we've seen. So, you know, this flip-flopping will continue to happen, and I think people are pricing in. The market is not, I'd say it's not underreacting and it's not overreacting anymore. It's kind of chilling where I think it probably should be given the circumstances. But there still has been a lot of damage done to the US dollar. Gold continues to be one of those things that is just absolutely winning, and good for gold, good for people who are holding gold. Give it a couple of years from now, and I think we will see some interesting lawsuits relating to the tweets and the news that has been surrounding this insider trading stuff. Okay, I was watching something really interesting. So something interesting has been happening with China. Trump exempted like electronics, right? Like iPhones, an old iPhone, okay? So he exempted finished goods from China. So these no longer have tariffs on them, but all of the components, like all of the parts, still have the like 120 whatever it is tariff on them. So effectively, what he has done is he has made the finished product, which China makes, he has made this easy to export at zero tariffs, and he has made people who have to buy the parts, people in America who have to buy these parts, get hit with tariffs, and he's basically made the US less competitive for their own products that they're making. I know they don't make iPhones, but like a laptop or something, for example. He's made the US less competitive and more expensive, and basically is just subsidizing China's local production and making them a way better deal, the finished goods coming from China, than the American built products. So he is really just destroying American built companies, which I thought was crazy. If you don't tariff the parts, or if you don't exempt the parts, but you only exempt the finished goods, you're basically just giving China a leg up, which is so just like wild. Another interesting phrase I've been hearing is that to call the market, you have to accurately call Trump. And I think that's a pretty accurate statement for what is going on in the market right now. Really, when you boil it down, he is the only thing that the market depends on day to day. Everything else, all of the other analysis and everything that you can do, obviously what he says and does has material impact on the market, but fundamentally, if you know what he is going to do next, you can pretty much predict what the market is going to do next. And that makes it extremely unfair for everybody else who is not an insider. And if you want to be the one to make money off of those kind of quick volatile moments, you have to know exactly what he's going to do. And that is extremely hard for everybody basically in the world to predict, except the handful of people that are very close to him. I've been hearing from some quite optimistic people recently that now is a really good time to get into the market, and I generally agree with that, and that's something I want to do. I still feel like it's a little bit expensive for me, and I don't know, like I've been saying every day pretty much, maybe I'll miss a good buying opportunity. But if I don't see anything that's pointing towards a concrete tone change from Trump Town, then I probably won't bother buying in. I'm still like basically fully in the market, and I was before all of this happened. I've actually bought a little bit with like the spare cash that I had lying around. And I would be buying even more, but the money I have on the sidelines right now is leveraged money. So I'm trying to be cautious with when I time it. I want it to be really worth adding the extra risk. And I feel like right now it's not really worth it. Last little thing here. I had a theory that today's kind of market slowness in the S&P 500, if you will, the kind of just boring non-volatility of it all, was because everybody in the US was doing their taxes because today was the tax deadline. So that's it. That's my theories. That's all I have to talk about today. And I guess I will see you the next time I do this, which might be in a while because I'm very busy. I'll try to keep you updated if anything interesting happens. Anyway, bye.